Joining me right now is Ernie Tedeschi, Director of Economics at the Yale Budget Lab and former chief economist in the Biden administration. Good to see you again. Thanks for coming back in. The posture from China seems to be waited out. The reporting I'm seeing is that China believes that Trump will eventually cave if they wait it out. And I'm wondering, where's the data on who can do that? Can China wait out Trump more than Trump can wait out China?
I think what China sees is that the Trump administration wants a deal. They've predicated this entire tariff strategy on reaching deals with other countries, and they have yet to reach a single deal with anyone. And so when you do that, it really compromises your position. It puts you in a weaker bargaining position. So look, like China and the United States are dependent on one another. They're both big countries, but they both trade a lot with one another. They will both, we will both hurt enormously if we have this trade war. I think what China has calculated, though, is that if they wait it out, the markets, in particular the equity and the bond markets, are going to do the talking for them to President Trump.
We're now more than, as I mentioned, a dozen days into this 90-day pause on these targeted tariffs. And now with what the president is saying, he's thinking of cutting it short and re-escalating things before that mark. My colleague Matt Egan was reporting for us this morning the Fed's latest survey, taking the pulse of American businesses, the Beige Book, and that it contained the word uncertainty 80 times, which is 7 times more than the same report last year. How much damage does uncertainty do?
I think that uncertainty is the biggest driver of the market turmoil that you've been seeing. Look, nobody likes tariffs. We estimate that these tariffs to date will cost the average American family $4,900 a year. That's meaningful. But I think actually most of what you've been seeing in markets is not the direct effect of tariffs affecting markets. It's the uncertainty of where tariffs will end up, the fact that businesses and consumers don't know. Because at least if there were finality about the tariff policy and what the final tariff rate would be on every commodity in every country, businesses and consumers could move on with their economic lives. They could start re-optimizing. They can't do that right now. They have to sit on their hands and they have to wait and see where things end up. And in the meantime, they don't know where tariffs are going to be, an hour from now, let alone a day from now, a week from now, a month from now. And so how can you as a business invest in that environment? You can't.
On top of this, with the uncertainty and what we're seeing play out, Citadel CEO Ken Griffin, who's a billionaire supporter of the president, had some unusually harsh words about this trade war. Let me play this.
The president and the Secretary of Treasury and the Secretary of Commerce need to be very thoughtful that when you have a brand, you need to behave in a way that respects that brand, that strengthens that brand. Because when you tarnish that brand, it can be a lifetime to repair the damage that has been done.
And what he's suggesting is long-term damage to the U.S. economy. I mean, what do you think of that?
I think that there's a substantial risk of that. We find in our economic modeling that the U.S. economy is persistently half a point smaller, the equivalent of almost $200 billion in $4 smaller in the long run. That's meaningful. That's a substantial amount of smaller economic activity from the United States. I think that it is in the future, none of this needs to be permanent. We could come back and we could fix this in the future. But I agree with him that the further down this road that we go, the harder it will be to fix later on down the line if we decide that this detour was a mistake all along.
Detour on the detour. Let's see what happens, as you said, in the next hour. Ernie, it's good to see you. Thank you for coming in.